Aloha and welcome to the Lava Channel. This is Market Take for Tuesday, July 18th, 2023. I want to thank you all for being here. We've got earnings week continuing. We're expecting U.S. retail sales, industrial production, and at 10 a.m., the Home Builder Confidence Index, which could prove a little bit of interest there. Tomorrow, we're getting the housing starts pre-market. And so I just wanted to go over this a little bit. The MMRI currently is 232.6. It's come down in its risk indicator for the moment off the 250 that it was approaching. But we've got the 10-year yield is dropping again after that market rally yesterday. The U.S. market's a green pre-market with NASDAQ leading. Bitcoin dropped below a key level yesterday of 30,000, and it's got some ground to regain. I don't really like it being below that key level. I'm going to wait and see, give it some time to kind of season out and decide which way it wants to go before I do any trading in relation to that, which would also kind of include the miners and Coinbase. So we've got gold, silver, and oil slightly higher, and the dollar is under pressure at 99.69 at the time I'm doing this. And so, really, that's the story behind this because the dollar is the tide that floats all ships as its relative strength drops. So, basically, if the dollar is worth less, then it takes more dollars to buy the same amount of goods, and it makes it look like the prices are higher, the stocks are higher, the market's going higher. So, on a broader term, the relative value to other currencies is another big picture that many people miss. And that's why I bring you stories from other sectors as well, because I think they're relevant and most people just don't look to it or they don't see it quite yet. This would include other things on the global scale, trade agreements and other central banks changing their monetary policy, whether they raise rates or not. And this is much more relevant than it used to be. We've got more bulls in as the Bank of America earnings come in. They came in ahead of expectations this morning. It looks like Morgan Stanley. These are peeps from my old days. Morgan Stanley, Dean Witter, and yeah, I still use eTrade Pro as my main platform. Probably shouldn't admit that. Anyway, so I think this market has more room for rally short term. We're heading into records again, record territory, just a crazy market floating until at least I think that perhaps the Fed will smack it with another hike. And then, yeah, we'll reassess after that. So, I'd like to do a quick note and reminder if you like any of this content, please, all I ask, just hit the like. It helps tremendously, and I appreciate you all. So, with that, I would like to go into our stories that we're covering. We've got Goldman Sachs chief economist. You see a lower chance of recession. They're floating out this story, and they're dismissing the inverted yield curve worries, saying, well, general consensus is turning bullish. We're going to have a soft landing, or we could just be turning around totally. And I'm starting to hear more stories of this. And honestly, the contrarian in me is just getting stronger. I'm very contrarian trader, hedge a lot, and it's done me well over the years. We've seen a lot of people are saying we've seen the bottom of the market, and maybe we have for a 70s style type of inflation and issues. But the things we're facing nowadays are not like the 70s. I believe, as a few others do, that it's more like the 40s. And we've got some other issues we've got to work out first. We've got some analysts are still calling for the Fed to actually cut rates next meeting. And I just don't see that happening. They've already gone into their blackout period, told us exactly what they're going to do. And I wonder how these analysts still have jobs, but we'll see if they're right somehow. So, next one is Janet Yellen. She sees disinflation pressures. They're working as hiring surge fades. So, basically, what it boils down to, less people have jobs. But if less people have jobs, then there's less production and the Fed wins. So, for all the lines, I can't do a goal. hurts too much, can't do a goal face. But this one qualifies for want to see a shocked face. Definitely shocked over this one. Really, not really. Next one that ties into this is I actually like Seeking Alpha, the book of their stories that they bring out to the markets. I think they've actually got some analysts at work, and they're saying the opposite: to beware the yield curve steepening and the turmoil that follows. They ask that hard question, really. Why is this time any different? The yield curve has proven in the past what happens, what follows, and now everybody's starting to act like we're just going to escape that and it's different. And I just obviously don't really agree with that. I had on the side of that, got a totally different story. Blackrock. Now, you all know this is basically they act for an arm, kind of a financial arm of the Federal Reserve military government type with their ties. And they have just appointed the CEO of Saudi Aramco to its board. So, anybody thinking this won't lead to increased oil price manipulation? Yeah. Anyway, next story. UK is on track for the most company insolvencies since 2009. So they're a bit of a smaller economy, if you would. And so they work kind of as a harbinger. They're leading a little bit of what's going on since it will affect them faster because they have lower volume. So they had some issues with their mortgage rates going on, and now they are beginning to have large company closures. They'll have the bankruptcies. Spoke yesterday about San Francisco and the large headwinds they're sharing, and it's going to take them an awful long time to recover, if ever, to go back to the way that they were. So the next story I've got involves international currencies, the Indian rupee. So this story is talking about how they've got a long way to go as a reserve unit. I don't view them that way. They could certainly head that direction eventually. They would have to tie to uh, some commodity or basket of commodities. They could be put in as a basket of reserve currencies like we use now, but I don't see them heading as a reserve unit for some time, and I don't think they need to. I think they're going to have that growth, and they've got other things going for it that they don't need that immediately. We've got our final story of the day is the Australian Central Bank that I was speaking of earlier. They decided to keep their interest rates steady this month, and their policy they had a very restrictive policy, and so they're starting to see their squeeze on their finances, and they're afraid of a sharp downturn and then their unemployment rate. So they're kind of floating along with the other central banks. So I wanted to share one other quick note. I do have the bare minimum for an account on Twitter now. Doesn't have much. I'll add the link later in the description. And for those of you that love the movie Office Space, I will be adding some flair later just for you. So, yeah, if you want. And I can't wait to follow some of you. So, with that, I wish you all a green trading day or just a wonderful day in general if you're not a trader. And again, I'm incredibly thankful to you all. And I will see you again in the morning. Stay free, my friends.